Here's what's coming up on the Peak Financial Freedom Show with Jim and Dan.
A lot of people in the same situation, they don't know enough about their money, they don't know the risks they're taking, and more importantly, they don't know how they're going to get through the rest of their life. They're worried.
And if you're a 65-year-old married couple, you should plan on having 4 more 40% losses happen during your lifetime, not just 1. 4 more.
You have to make sure you safeguard those assets that you've saved your entire life and be able to use those effectively in retirement for income. Because the most important thing at this point is not how much growth you're getting off that portfolio, is how to use those assets for income to sustain you for the rest of your life.
You're watching the Peak Financial Freedom Show with Jim and Dan, Sacramento's retirement television.
Hi, I'm Dan Ahmad. My partner Jim Files and I are co-founders of Peak Financial Freedom Group. We are proud sponsors of this show. As investment advisor representatives of our own RIA, we are legally bound by a fiduciary duty to our advisory clients. Specifically, we owe our advisory clients an affirmative duty of utmost good faith, requiring us to provide full disclosure of all material facts and obligating us to employ reasonable care to avoid anything misleading. We design customized written retirement income plans for retirees and soon-to-be retirees. If you've saved a lot of money for retirement and don't want to lose it, don't want it to run out, and don't want to make a mistake with it, stay tuned. You're going to love the show. We want to help you protect your assets against large stock market losses, earn competitive returns without taking excessive risk, and create dependable monthly income that will last for as long as you live. Our goal is to help you stop worrying about your money so much by building you a customized written retirement income plan. We put everything in writing. And here's the best news. We will not charge you for your plan. You will never feel any obligation or pressure to work with us. It's always your choice. But if you do decide to become our client and you're looking for some growth without taking excessive risk, we get paid advisory fees on the money we invest for you. If on some of your funds you're looking for protection against stock market losses and need dependable lifetime income, and we use an annuity as part of your plan, we are paid commissions. That's why we don't have to charge you additional planning fees to create your customized, comprehensive written retirement income plan. Before you invest any money with us, we will tell you all the fees you will pay in writing. We believe in transparency. And after we build your plan, you won't worry about your money so much. So sit back and enjoy the show. Thanks for joining us.
Hi, and welcome to this week's AskPeakNow.com, where you, the Sacramento area, email your questions into us, and we answer them right here on the show. Jim, my first question is for you, and it is, years ago, my company had a pension plan, then terminated it, and started a new 401k. I rolled both funds over to my IRA and have approximately $3.2 million in that account. We have another $300,000 in a brokerage account and $200,000 in the bank. My wife and I both get Social Security. How can we create a plan that will provide us dependable monthly income so we don't have to worry about our money? We want to have a great retirement and then pass on any remaining assets to our 3 children. What can we do?
Well, that's a great question. And you're planning right now by thinking ahead. And you did a really great job by taking your 401k funds and transferring those into an IRA, because now they can be self-directed. Now you can actually have a plan put in place and answer the question that you've asked. And you've done a great job in accumulating these assets, and now what you have to do, and I think you're mindful of that, is putting together a plan that's going to lead you through the rest of your life. Number one, having a comprehensive plan is super, super important. What you need to understand right now is how to place those assets, what assets you should be purchasing, how those assets are going to behave in a bad market, and what's the likelihood your money will never run out. And those are probably key questions that you need answered right now in both your wife and your mind. So we will put together, or you should have put together, an income plan, a tax plan, and a beneficiary plan, so you have all that information in writing, understand the risk you have in your portfolio, the fees you're going to be paying, and what you likely could lose in a market crash. Once you understand all that information, and if it's in writing and detailed, both you and your wife are going to feel very, very comfortable in your retirement.
Thanks, Jim. Dan, my next question is for you, and it's from Carol in Fair Oaks, and she writes, "Hi, Dan. My husband and I have had advisors over the years, but never had a true written plan. We have almost $1.9 million saved. Is this enough to create an actual plan? Can you please describe again exactly what a written plan is and how it works?"
Sure. Well, Carol, that's a great question, and I think a lot of people right now are feeling what you're feeling, which is they don't have an actual plan. They might get a lot of statements either on a monthly basis or a quarterly basis, and they don't even understand the statements. It might have a beautiful pie chart, and it looks wonderful, but you don't understand anything about your statement or your money other than it goes up and down in value, and that's what most people feel. So what we want to do is always create what we call a comprehensive written retirement income plan for every client, and there's multiple pieces to this. The first thing we do then is create a retirement income projection. This is going to show you for all years throughout retirement, let's say the next 30 years, how much income you'll get each year, where each income source will come from each year, and whether those income sources are guaranteed income or maybe income. That'll make you feel really comfortable that you know where the income is going to come from. And now that you're retired, that's one of the most important things, is to feel comfortable on a monthly basis that you have enough money to pay for everything you want and need. The second thing we do is to make sure we manage your taxation by doing a complete income tax analysis. We're going to look at your total income coming in per year, we're going to look at how much tax you're going to pay, and we're going to be able to show you each month how much net after-tax income you have to spend, which means that's the amount you have to pay for all your wants and your needs and how much you have left over to save, which will make you feel really comfortable. The third aspect, if you have beneficiaries or charities you want to leave money to, we want to be able to tell you closely how much money you can approximately leave to your beneficiaries after you use all your assets for your income. You want to know how much could be potentially left over, and then we want to tie every data, every piece of information together in a 12 to 24-page written plan, all the data, all the information as far as the advantages, the disadvantages, the costs, the fees, and the steps you're going to go through to feel really comfortable about retirement for the future. So Carol, that was a great question. I hope that helped you.
All right, Dan, thanks so much. And Jim, my last question is for you. It's from Sergio in Sacramento, and he writes, "Hi, Jim. Every time my wife and I meet with our advisor, she shows us a beautiful pie chart that looks cool and has great graphics. We tell her we are worried about the market and its volatility, but she always assures us that everything will be okay. We worry more and more all the time, but we don't understand our money. We seem to lose a lot, make a little bit here and there, and then lose a lot again. Lately, we feel that we could be paying more in fees than what we earn. We are both at age 65 and want to guarantee our future. We asked her for a plan multiple times, but we have not received anything in writing. What should we do?"
Well, Sergio, those are great questions, and you're in front of this at this point in your life, which is so important. Number one, you need a comprehensive plan put in place. Just investing your money isn't good enough. When you're in your 20s, 30s, and 40s, and you're making contributions to your retirement plan, you didn't need a lot of guidance because you were dollar cost averaging into these investments over time, and you had less money. But now you're 65 years old, you and your wife are looking at retirement. You have to make sure you safeguard those assets that you've saved your entire life and be able to use those effectively in retirement for income. Because the most important thing at this point is not how much growth you're getting off that portfolio, is how to use those assets for income to sustain you for the rest of your life. And that's what you and your wife are probably thinking about right now. And yes, it's very important to understand the fees in the portfolio and the risk in your portfolio. And if your advisor isn't giving you this information, that's bad for him. And what's good for you and your wife is that you've recognized this at this point and you're able to seek other sources in order to provide you this. So it is very key right now that you have an income plan, a tax plan, and a beneficiary plan, so both you and your wife know where your income's coming from, what the taxation is going to be, and can you leave money to your children when you pass away. So Sergio, thank you so much for the question. I really appreciated that.
Dan, Jim, thanks so much. And special thanks to Mike, Carol, and Sergio for those wonderful questions. Hey, if you want your questions answered here on the show, it's really simple. Just go to askpeaknow.com, send in those questions, and we may answer them right here on the show. Don't go anywhere. We'll be right back.
You're watching the Peak Financial Freedom Show with Jim and Dan, Sacramento's retirement television.
Are you worried about taking too much risk, paying high fees, creating dependable monthly income, your money running out? You can stop worrying about your money by meeting with a full-service retirement planning firm, not just someone who invests your money. Call right now to receive your free, no-obligation Peak Retirement Navigator review that includes a total fee audit, a risk stress test showing your potential losses, a retirement income analysis showing how long your money will last, and the steps to create a customized written retirement income plan. Our clients typically have between $1 million to $20 million of assets, but if you've saved at least $500,000 for retirement, We will meet with you free of charge to see if we can possibly help. You'll get free educational copies of Mama's Secret Recipe for Retirement Success we co-wrote with Jack Canfield from Chicken Soup for the Soul, and our beautiful, inspiring 100 Shades of Financial Freedom. So don't wait. Call the phone number on your screen right now. You have nothing to lose, there's no pressure, there's no risk, and it's free. And remember, at Peak Financial Freedom Group, we fix your money.
You're watching the Peak Financial Freedom Show with Jim and Dan, Sacramento's retirement television.
Jim, I'm so excited about this week's segment of We Fix Your Money. Today we're going to cover a hypothetical case study about Luann, and that's just the name we're going to call her. And we want to cover all the details about what we would do to create a comprehensive written retirement income plan, and this allows us to do so because we talk about it so much on the show. Right? So we want to make sure we give some details. Well, Luann, in this case, let's pretend like she's 71.
Right.
Her husband's a lot older than her, 89. He definitely is having some health issues. So she's worried, he's worried. She loses $43,000 of his pension when he dies, and she loses all of his $17,000 Social Security. So that's a lot of money. She's going to lose 60 grand a year. She's a teacher, so she gets a pension. They have about $1 million in the portfolio and about 70 grand in the bank. Well, why don't you tell me, what were some of the worries she had about their money right now?
Well, number one, taking care of her money, and now that she'd be by herself if her husband passed, the loss of $60,000 of annual income from his pension, the fact that she had a lot of risk, or she thought she had a lot of risk in her portfolio, she didn't really understand it at that point. She had a budget of $8,000 a month, and that wasn't going to be enough income in retirement. She also had the concern of money running out. In addition to that, Dan, what else concerns does she have?
Well, she's worried that her lifestyle is going to have to change if he passes away, which is what most people would worry about. She definitely is worried about how much tax she's going to pay now as a single person, because she knows tax rates are higher for a single person, and she would like to leave money to her son, but she's just not sure if she can. Jerry, her husband's broker of 20 years, he's very aggressive, and it's a very aggressive portfolio.
Right.
She thought she was paying about 1% in fees, and she's never had a written plan, and right now she knows she needs one if it's going to end up landing on her to take care of their money. So what's the first step we're going to take in all cases when we start working with someone? And we hope this, really appeals to the people out there because it might remind them of themselves, this type of case study.
Right. In order to put together a comprehensive written plan, we have to assess the risk first. And he's much older than she is, and when he passes on, she's going to have to manage the money. And not knowing where your risk is and how much you could lose could be quite devastating to a portfolio over the long term. So in her case, we did a risk analysis for her. We used a third-party company for doing this. They have all the formulas, they have all the data. They came back with a 38% risk factor, which means if we have another 2008, again, she could lose potentially $409,000 of their asset base, which means they'd have to have about a 55% rate of return just to get back to even. That was unacceptable. They had no idea they had that level of risk in their portfolio, particularly since her husband was 89 years of age. We remodeled it. We reduced the risk down from 38% down to approximately 5%. And rather than losing over $400,000 in our example, they were proposed to lose approximately $50,000. And the recovery gain was only about 5%. So trying to get a 5% rate of return is much easier and much more achievable than trying to get a 55% rate of return.
Well, especially if she doesn't want to be that aggressive, she wants to be conservative, we have to have some form of a portfolio that reduces that risk. Well, after the risk reduction, we're going to then jump right into how can we create income with her as a survivor, because we're assuming it's just going to be her at some point in the future based on their age difference.
Right.
And we're then going to create a 30-year analysis for her because she thinks she will live to 100. So we're going to show what's going to happen from age 71 to age 100 with her income flow if it's just her. And it's important because you got to simplify this for her. She hasn't done the money before. We got to simplify everything about her money on one page. And imagine if that's what you had, everything about your money on one page, where we could see that if he passed away now in 2018 in this example, that she would then go all the way across that red oval and look to the right-hand side showing her total annual income. She'd be receiving about $155,000 a year of gross income. Lesser taxes, she'd have enough money to spend on a monthly basis, and it's going to last for as long as she lives, even if he's gone. And that was the key. She wanted to feel safe.
Right, exactly. And a lot of people in the same situation, they don't know enough about their money, they don't know the risks they're taking, and more importantly, they don't know how they're going to get through the rest of their life. They're worried, and what we're trying to do with these plans and being able to delineate this in a fashion that's really simple to understand where your money's coming from so you can spend your money and not worry.
Yeah, we diversified assets between bank money, between some stop-loss money, some guarantees from insurance companies, and it fit perfectly for her in this type of hypothetical case study, just like it could work for people out there. So if you saw some things that you like, maybe if it's just the whole idea of putting a written plan together, maybe making your money a lot easier, feel free. Give us a call. We'll be glad to sit down with you. It doesn't cost you anything, and we can find out, do we think we can help you?
Yeah, and remember, at Peak Financial Freedom Group, we fix your money.
You're watching the Peak Financial Freedom Show with Jim and Dan, Sacramento's retirement television.
Do you have an actual plan, or do you just receive statements from where your money is invested? Too few retirees and pre-retirees don't have a plan and are not prepared for retirement. A great way to get a clear, written retirement plan is to meet with a full-service retirement planning firm, not just someone who invests your money. If a clear, written retirement plan is something you want, be one of the first 5 callers right now, and you'll receive our Peak Retirement Navigator review. Here's what you'll receive from your Peak Retirement Navigator. Number 1, a fee audit exposing your direct and hidden fees inside your portfolio. Number 2, a risk report showing you how much you could lose in a market decline. Number 3, a risk analysis to protect your investments from large stock market losses. And number 4, an income plan showing you how much income you will need in retirement. So don't wait. Call the phone number on the screen right now for your no-cost, no-obligation Peak Retirement Navigator review, which includes your Retirement Survival Toolkit. You have nothing to lose, there is no pressure, there is no risk, and it's free. And remember, at Peak Financial Freedom Group, we fix your money.
You're watching the Peak Financial Freedom Show with Jim and Dan, Sacramento's retirement television.
Hi, and welcome to this week's Retirement True or False. Gentlemen, I have some great questions. Jim, I'm going to begin with you. I'm retired and I worry about my money all the time. And there's nothing I can do about it. True or false?
False. If you don't have a written, comprehensive income plan, tax plan, beneficiary plan, yes, you should worry about your money. But that's what we do at our firm. You have to understand how to position your money at this time in your life so you don't have a catastrophic event that will change your lifestyle in the future. You have to understand, most importantly, the amount of risk you currently have in your portfolio. Not that you're conservative or moderate with your money, it's how much are you going to lose potentially in the next market crash. We use research engines to determine this for you. Then you have to understand the fees you're paying, because fees can eat away on your gain over a long period of time. It can dilute your earnings and your portfolio value. Then you have to understand where your income's coming from. Will the income increase? Will it decrease? Will it go away? Is the income certain income? Is it maybe income coming off your portfolio? You have to understand your taxation. Do you have enough money to pay for your budget items? And more importantly, do you have excess money to help offset inflation and long-term medical care costs? You have to understand all this, and all this has to be understood and in writing by the advisor before you invest the money. Not after you invest the money, before you place your assets, because this determines how you're going to select your assets by how you answer those questions.
Dan, my next question is for you. The stock market really doesn't suffer large losses very often, so I shouldn't be worried about a stock market crash. True or false?
Completely false. When you look back to history, let's go back to 1929. There have been 13 times that the market has had what they call a bear market, which means a loss of 20% or larger. 13 times. Doesn't sound like that many, but that means it happens every 7 years. Well, these losses that have happened 13 times average almost a 40% loss every 7 years. So when you think about it, we're 11 years into this bull market, so we're 4 years overdue. We have to now take into consideration we're going to have these types of losses most likely based on this historical data. So a 40% loss every 7 years, that's a huge loss, and that happens all the time, because if you think right now it happens, and then we have 7 years down the road it happens again, and on. If you're a 65-year-old married couple, you should plan on having 4 more 40% losses happen during your lifetime. Not just 1, 4 more. So think about what that would mean to your pot of money right now, your retirement dollars.
And you can position your portfolio to reduce that risk significantly. Most consumers don't understand that because they have a typical brokerage firm or advisor that has them strictly in a diversified portfolio. And you're at great risk when you have that. We believe in stocks and bonds. We do believe it.
And you're right. You can do that. You can adjust your portfolio before it suffers a loss. You cannot diversify your portfolio after it suffers a loss, because there's nothing that can be done after that other than you have to hang in there and hope your money comes back.
That's
You know, guys, it's so important to know the history, because if the past is probably the greatest indicator of the future for the market, and if it keeps happening every X amount of years, Why aren't you prepared for it? And if you're going to be retired 20, 30 years or longer, and chances are it's going to happen 2, 3, 4 times in your retirement, why aren't you planned up for it, right? Jim, my last question is for you. And it is, if I like and trust my advisor, it's perfectly fine and acceptable that they've not put the fees I'm paying and the risk I'm taking in writing and have not given me a full written retirement plan. True or false?
False. You should like and you should trust your advisor, but that's not what you hired them for. You hired them for their specific skill set so that you understood what your fees were or are going to be in the future. Not just the advisor fee, but all the different fees under the line, what we call the hidden fees in the mutual funds, the internal trading costs in those funds, these other fees that the average consumer does not understand. That has to be put in writing. Your risk has to be put in writing. How much you can potentially lose in the next stock market crash. You have to understand that as a consumer so you're comfortable with your plan. Then all these details of all this information, not only risk and fees, but income, taxation, how much you potentially leave to beneficiaries, all this information should be put in a comprehensive written retirement income plan, tax plan, and beneficiary plan. The problem we have, and this is where the real rub in the industry is, there's not many firms that do this. Dan and I are mentors and coaches for firms outside of our business in the industry that actually bring us in to try to teach these advisors how to do this for their advisors that they manage.
Well, the key is you look at then what's really going on for the client. They think it's okay that their advisor isn't providing them this data because no one else ever has. Most clients don't even know someone will provide them this data, that they can get their fees in writing before they invest their money. They can get their risk in writing before they invest their money. They can actually have a complete plan that's going to show them what retirement's going to look like, how much income they're going to get, where each income source is going to come from for the next 30 years, how much tax they're going to pay, what they possibly could leave to their beneficiaries, and have all that in this nice package. If they have that, it's how they reduce their worries, it reduces their fees, and it allows them to finally live the retirement they planned for, the retirement of their dreams, so they don't have to worry about their money any longer.
You know, Dan, every time I hear you say that, it makes me feel good for your clients because I know how I would feel if I walked in and it was all spelled out, not for just next year, not for just the year after, but for as long as you're on this planet, you and your spouse, if there's a spouse or significant other. That would certainly make my day. So I want to wrap up on a high note here. How wonderful it is when you get to tell someone, here's everything, and what is the response that you normally get when they actually see the rest of their retirement all planned out, black and white on paper?
We get such a huge joy. Jim and I, it's why we do this business. When you get to help someone that knows nothing about their money, literally, no clients come in knowing anything about their money, doesn't matter who they are. We get to help them so much to put everything together in a package. They are relieved when we get done with our whole process, which might take several meetings. We get done with the process, all the pressure and all the weight is lifted off their shoulders. They feel so good knowing that things are going to work for the rest of their life, regardless of what happens in politics or the economy or the stock market or with other countries. They're going to be okay for the rest of their lives.
Dan, Jim, thanks so much. Hey, if you want more information about getting a full written retirement plan for you, pick up the phone and give us a call right now or go to our website. Don't go anywhere. We'll be right back.
You're watching the Peak Financial Freedom Show with Jim and Dan, Sacramento's retirement television.
Are you worried about taking too much risk, paying high fees, creating dependable monthly income, your money running out? You can stop worrying about your money by meeting with a full-service retirement planning firm, not just someone who invests your money. Call right now to receive your free, no-obligation Peak Retirement Navigator review that includes a total fee audit, a risk stress test showing your potential losses, a retirement income analysis showing how long your money will last, and the steps to create a customized written retirement income plan. Our clients typically have between $1 million to $20 million of assets, but if you've saved at least $500,000 for retirement, we will meet with you free of charge to see if we can possibly help. You'll get free educational copies of Mama's Secret Recipe for Retirement Success we co-wrote with Jack Canfield from Chicken Soup for the Soul, and our beautiful, inspiring 100 Shades of Financial Freedom. So don't wait. Call the phone number on your screen right now. You have nothing to lose, there's no pressure, there's no risk, and it's free. And remember, at Peak Financial Freedom Group, we fix your money.
You're watching the Peak Financial Freedom Show with Jim and Dan, Sacramento's retirement television.
Hi, and welcome to this week's Is Your Retirement in Jeopardy? Gentlemen, are you ready?
We're ready.
Jim, a document that shows how much income you will receive for as long as you live, where each income source comes from, how much income tax you will pay on your income, your net monthly after-tax income, the risk you are taking, the fees you are paying, how much you can leave to your beneficiaries, the advantages and the disadvantages of the plan.
What is a comprehensive retirement income plan?
Money.
Oh, I love that. That's great. You know, most people don't understand what you just said. They don't understand all this information needs to be in writing, and that's what you need. You need a comprehensive retirement income plan so you understand your taxes, your fees, your risk, your income, etc.
So not understanding what I just said means they're a lot like my wife, I think. We'll put them in that same. What did he just say? I don't know. Are you ready for the next question?
I am, sir.
Here it is. The biggest combined emotional and financial blunder people make?
That answer is, or the question is, what is the concept of believing and thinking your advisor is your friend?
Money.
And a lot of people make this big mistake. And you look at that when we choose a financial advisor, you want to like them. They need to be nice to you, but they're not your friend. They're the person that provides you sound financial advice that helps you make the best financial decisions. If you think of them as a friend first, you're going to make a lot of mistakes, and you're going to allow them to not provide you things you want. So if you think right now, as your advisor is your friend, you have to ask yourself, do you have anything in writing? Do they tell you how much risk you have? Do they tell you how much fees you have? Do they tell you how long your money is going to last, and is it guaranteed? And you probably don't, so that means your advisor is not your friend.
And of course, Dan, if your money goes down, your advisor is going to be happy to write you a check for the difference that went down.
Oh, all the advisors out there will do it. You just ask them, just like if they're overcharging you in fees, just go ask them to write you a check.
No problem.
Oh,
Give me
they'll write
that
you a
check
for the excess fees.
Jim, I'm going to wrap up with you. The single biggest fear people planning for retirement have about their money.
What is worrying about running out of your money?
You are absolutely correct.
That's the single biggest fear we hear every single day. People are worried about running out of their money. They don't have a plan in place. They don't know the risks they're taking. They don't know all the elements that are needed to have answers to in order to get through retirement successfully. And that is why they do need a plan in place, not just a bunch of statements.
Guys, thanks so much. Hey, is your retirement in jeopardy? If so, give our office a call right now or go to our website. And don't go anywhere. We'll be right back.
You're watching the Peak Financial Freedom Show with Jim and Dan, Sacramento's retirement television.
Hey guys, great show this week. Thanks so much for tuning in.
If you need any additional information, just call our office or feel free to visit our website.
And remember, at Peak Financial Freedom Group, we fix your money.
The preceding program is sponsored by Peak Financial Freedom Group.